Good morning, traders. It's Friday, April 26th. Taking a look at the charts, we definitely have a lot of markets with earnings season out here. The market's whipping around. Yesterday, we saw a big gap down. Yesterday was, what was it? It was IBM. If you take a look at IBM, we had a huge gap down with some bad earnings. Also, we had Meta, which is Facebook. Big gap down with some terrible earnings. That pulled the market down yesterday. We saw the large caps like the Dow, SP 500, NASDAQ all down yesterday while the Russell 2000 rallied. And today it's like the opposite. The Russell slightly positive, was negative a minute ago. And now the large indexes are higher simply because there's the flip of that today. Today we have Microsoft. Microsoft with good earnings. You have to look down this bottom 10-minute chart down here. Huge gap up in Microsoft. They had good earnings. And Google, Alphabet, also you can see on the 10-minute chart at the bottom here, huge move up as well. So today is the opposite of yesterday. We got small caps more or less down, large caps up. And it's just a kind of a yin and yang. The markets some days are going to be pulling up with earnings. Other days they're going to be pulling back. Definitely tech driven with these big tech companies today. Overall, if we take a look at the overall sentiment of the market, let's take a look at the VIX real quick. The VIX was pretty high up here. It has been fading back down. If we look at the put-call ratio is starting to work itself down a little bit. It did gap higher yesterday, so there's still quite a bit of fear actually in this market. And it opened up higher and telling us that people are naturally buying put options right at the opening bell, betting on lower pricing. That is a sign that we're getting closer to potentially a bounce or a bottom. If we look at yesterday's price action, like the SPY, we had a big gap down yesterday morning. Actually, the 30-minute chart shows it even better. Huge gap down yesterday because of big tech earnings. And then, of course, as we know, gaps get filled. We also saw a couple other things in line there. We saw the panic, a big gap down, which is one. We know price generally wants to go up and fill that gap, which more or less it did. Don't always have to go right to the closing price. You can go kind of the intraday as a most conservative level. And we had panic selling. So the market gap lower, panic selling, and we had that bounce back. Today, the market's set to open sharply higher. And it'll be a big gap up, meaning we could see the price gap down, or sorry, not gap down, but today the market will open higher and it could fade back down. So we're kind of rallying up and then we go boom, boom, boom. Lots of volatility. That's what happens when we get into a market that doesn't know really what it wants to do. It bounced up to the 50-day, the 20-day, got rejected yesterday. Today it's set to open at 507, which is right back up at the highs from 2 days ago. It's also the 50-day and 20-day. So it's gapping up into more or less resistance. Will probably be FOMO, meaning we'll see the red indicator spike up. When the red indicator spikes up and we see it trade up at these levels, just like over here, the market naturally wants to pull back after that. So we'll just see. Again, this is all short-term stuff. We're not trading this, but it's nice to know, be mentally prepared for this type of volatility and price action. If we take a look over at bonds, we are seeing money flow into bonds this morning a little bit, but it is just bleeding out, just like all of these other ones where they just start to pick up speed and continue to drop. We talked about this yesterday. We can see the things I drew on the charts here. We could continue to see bonds just drift and move lower and catch a lot of people off guard. Majority of people who are picking bottoms all kind of more or less muscled into it somewhere in this range. Now most people are out of the money. They're losing money, and they're going to potentially see a pretty big loss in their bond trades, and then they'll eventually bail out, realizing that they shouldn't have done that. If this does continue to go down. So we're just going to let that mature and let other people ride it down, and we'll let it build a base and get long bonds when they're actually going up. If we take a look at some of the other plays here, let's take a look over at the dollar real quick. Dollar index up about 0.2%. It is kind of up at resistance, got a little bit of a bull flag pulling back to the 20-day. It's a little bit oversold on our 30-minute chart, telling us that we could see a little bit of bargain hunters step in, which they have. It is trading up in pre-market. It will be trading higher up this morning, somewhere up into this area. If we take a look over at gold, silver, and miners are all finding a little bit of a bounce, a little bit of a bid yesterday, getting bought up, finding support at the 20-day. I talked about, I think yesterday, I like GDX the most out of the charts. It's got a chart pattern. You can see I drew on here pointing to higher pricing. Yesterday had a very strong reversal off the 20-day and pushing higher. So we'll see how that goes. It is trading higher again in pre-market. So we'll see how this unfolds, but there's still, I think, another wave higher in gold, silver, and miners as the stock market maybe has topped out, or even if it does pull back or rallies the stock market, I think we can see precious metals hold their ground and do fairly well. This is their time to shine for a month or two. And then I think they're going to get hit, and we'll wait for a bigger opportunity after, I think, a broad market correction, a bear market later this year or early next year for metals to have their big multi-year run. If we take a look over at energies real quick, we got crude oil starting to find support off the 20-day, starting to move up. We'll see if it can get traction and keep going higher. If we look at the energy stocks, which have been leading the way, they continue to have this V-shaped kind of recovery. So quick pullback with broad selling across the market. Everything pretty much got hit, and now it's climbing its way back up, and maybe it just wants to keep going higher with a V-shaped recovery. We'll see how that goes. But so far, it is showing good strength, and that is also pointing to potentially oil continuing to move higher also. Copper, I'll just quickly touch on it. Not a whole lot here. Copper has been having a nice run up, but let's just go back, look at the big picture of copper. A lot of people, for some reason, are super caught up in copper these days. I don't really follow it that much, but it's right up in getting close to nosebleed. There's some, obviously, maybe a little bit of more upside potential if we were to just draw a trend. Whoops, not a very straight trend line. Some rough kind of trend line across these highs. There's potential for it to maybe go higher, but overall it is really into a pretty major resistance area if we draw a line across all of these highs here. And of course, we've got these highs. It's definitely up into this upper range where for some reason people are saying if copper is up, we're going to see the economy do well. I don't really see it that way. I think people are just thinking that the economy is doing well. We're in this complacency move and they're chasing it up. And driving it up. It seems to be headline news. Everybody wants to talk about it now again. So that's usually the sign that we're very close. This is a monthly chart. So next month or two, this could lose steam and reverse down fairly quickly and unwind with the economy if it does. But I'm not that excited about copper. In fact, I think it's more of a bit of a dangerous play, to be honest, at this point. Other than that, let's take a look at the hot list. There was a new trigger yesterday, SILJ, very similar to the GDX chart. It's pulled back, had a nice strong pop and reversal, so it has a new trigger there. GDX had one 4 days ago. It's up about 5% from that level as well. We are seeing silver, gold, and copper miners all trading higher or at the top of the list. So we're seeing lots of strength in that area. Overall, that's about it. If we look at the long-term chart, our weekly chart, we are definitely into still a bullish phase. We've had the market reset here on their shorter term strategy for triggers. And we're just going to let the market figure out what it's going to do. Is it going to consolidate? If we go back here, is it going to consolidate for a couple months? Is it just a quick, tiny reset and then the market moves back up, or a tiny reset and then runs higher again? Or what is it going to do? Is it going to go into some choppiness and maybe chop us up? We'll have to see how this unfolds. Anyways, that's it for now. We'll talk to you soon. Bye-bye.